At least one software company saw its shares, recovering slightly this week. Let's have a look at OpenText here. That's an Ontario-based information manager. The stock coming under pressure yesterday. It's big in cloud. That's where investors see growth. Let's find out what the latest earnings mean for investors. We're joined by Steve Enders, software research analyst at Citi. Steve, thanks very much indeed for joining us. Now, OpenText, I always think of them as a company that helps corporations manage the vast amounts of data coming at them. Sometimes for regulatory purposes, there might be an email. Oh, that's important. Just update us. How do they make money?
Yeah, I think that's probably a good place to start. I think at the core of it, they're really good in information management, content management, managing all of your content, especially in a secure and governed way. I think the company has expanded over the past decade. Really has been focused on M&A, and they went and acquired quite a bit of assets from things like Micro Focus and others that have kind of expanded beyond those kind of core roots and content. But I think when you look at it today, the core is still content, and then you have things around security and data analytics in their business network business. But it's all kind of centered around the sharing and the management of content at its core.
Stock is up a little bit in the pre-market, but we have seen a rally in some of these tech names that have been battered. But they include OpenText. Have they been caught up in this worry that tools from companies such as Anthropic will just erode their core business?
Yeah, I think that's very much the concern in the market. And I think, to your point, we are seeing that kind of broadly across software and at this time. And I think there still is some ongoing concerns around what the future of any of these companies is going to look like. Even in an area where you might feel like it might be a little bit more secure, either in the infrastructure layer, which I think is sort of what OpenText is trying to pitch right now, and how they're trying to frame things, is that they help enable the next wave of software and helping you manage agents and helping you kind of build those solutions moving forward. I think it's still early days for that and what they're doing with their Aviator solution, but it is still something that they're focused on, and I think they feel like they're well set up to potentially capture and execute on this agentic workforce that's coming in the future.
So the revenue was nearly flat year over year. Was that because of divestitures?
Yeah, so I think it's an area that's probably coming a little bit more in the future. I think they just closed their first major divestiture this quarter, and so that's not showing up until we start looking at fiscal 3Q numbers. But that did have a bit of an impact in terms of what they're guiding to at this point. I think for OpenText there is quite a bit of I guess there is some impact from prior divestitures that's hitting here as well. But then there is also just some volatility within the core business as well, in terms of when revenue comes through and some of the more challenging comps that they have, especially on the licensing business, their on-prem portion. So it's kind of multifold. There is some timing dynamics, and that's also kind of impacting part of the fiscal 3Q guide. Here, where you do have some deals that kind of got pulled into their 2Q in the most recent quarter, and I think that's partially probably what's impacting the I guess some of the performance is just there's not a great line of sight to when some of these deals might hit, and it does create a little bit of volatility from a numbers perspective, especially when we start looking at the year-over-year growth rates.
And what would be their secret sauce? Is there something unique to OpenText's technology?
Yeah, I mean, they're really good at content management. I think both from the core business within OpenText and also some of the acquisitions they've made, like Documentum, that I think they acquired almost a decade ago. But I would say they have some of the best assets within content management, and it really comes down to everything around security and governance when you're dealing with that content. I think they have really good relationships with SAP and have a really good partnership there where they do really well within that ecosystem. And I think it really kind of helps enable a lot of what they do. And so I think when you think about where they're essentially kind of focused, it's everything around the content management layer, and then that extends into other use cases, like in security and trying to manage that posture, and then also looking at kind of the business network side and managing supply chain and sharing of contracts. And so just a lot of use cases around content and a lot of things that you can kind of do with that data that could be helpful, beneficial in the future as we think about training AI and training agents for this next phase in software.
We're tight for time, but Bloomberg says that there's 10 holds out there and only 3 buys on the stock, and you're neutral right now. So what would you want to see before you went to a buy?
Yeah, I mean, I think a lot of it comes down to just having more confidence in the forward outlook and be able to feel comfortable around where estimates could go here. I think the big thing is just thinking through the divestitures that they're planning to make and what's going on, and feeling better around kind of what the free cash flow progression will look like, and just kind of getting a little bit more confidence through the uncertainty that's going on. And I think if we get a little bit better line of sight to those things and a little bit more consistent execution, then I think that would provide a little bit more confidence on top of managing through the current headwinds and concerns that are in the marketplace related to AI and the impact that could have on OpenText longer term.
Steve, thank you very much indeed for joining us. That is Steve Enders, a software research analyst at Citi.